Hi traders, welcome to the free Forex course. This is the third video and I'm going to show you some very important information about the Forex market that can really make a difference in your trading, so pay attention. If we are going to be doing scalping or intraday trading, it is very important that we identify the trend. But I don't mean to identify the trend when it is about to end and it's very risky to enter into a trade. What I mean is to identify where and why the trend began. And with a high probability of success, enter at the beginning of the trade. The trend and the trend. That way, you can take advantage of most of the move. And the trades that do work overcompensate the few trades or some trades that don't. In this chart, we can see that the trend is downward, but if you identify the trend over here or over here, it is already too late. The beginning of the trend is on the 20th of September. This date, we had the announcement of the Federal Reserve, and we see this candle. It's an hour chart of the euro dollar. And once again, this huge amount of volume, and yes, you can analyze volume in Forex. If you couldn't analyze price either. Is much higher than any of the other candles. That tells you that the smart money created a fake move upward in order to sell at the top once the announcement came out. Okay? Because there are a lot of traders congregated for those announcements. Now, in a little bit, I'm going to show you the volume in a centralized exchange, the future markets, and you can see the volume also. Let's look at the GBP USD. We have the same huge amount of volume and the same candle. And this way, we know the move is because of the US dollar. Why? Because it's affecting all the majors. It is much better to enter into a trade, put a stop on top of that candle, and ride the trend downward, than try to do some scalping in the middle of it. But if you are inclined to do so, if you identify this candle with a huge amount of volume, then you know it's better to look for scalping trades and intraday trades to the downward side. Okay? Because the market is going to be much nicer to you if you are following the biggest force instead of fighting the trend and trying to find some trades with these hammer candles and then seeing how difficult it is for the move to actually develop, and then boom, a huge move downward again. Let's look at the other main Forex pairs. Aussie dollar has the same move, okay? And it is not exactly the same. These are the levels where a lot of traders claim you can find liquidity, but look and see that the move continue going upwards. It was the volume at the end of the candle that let you know exactly when the selling began by the smart money. Now, let's look at other Forex pairs like the New Zealand dollar, for example. You can see that over here, we had the same candle, came down a little bit, came up to the top of the candle, came down a little bit, and then it came all the way to this level and then downward in what it is mostly a sideways move. There is a reason why, even though because of the announcement, the US dollar catch a bit, the New Zealand dollar was just almost as strong, and that's why it didn't give in to the movement of the US dollar, and we'll see that in a second. Everything has a reason in Forex, just like dollar Swiss franc, we have this big move with the Federal Reserve announcement, and then we have this other bigger move the next day. There is a reason for it, and then we have the continuation. Let's look at the US CAD. we have the same candle, a lot of volume, then a move sideways, and then finally a move in the direction of the US dollar, which means the Canadian dollar also was as strong as the US dollar, and that's why it didn't give in to the movement of the US dollar. We don't analyze exactly why that happened, but before we get to that, I want to show you the future contract so you can see, you can analyze the volume. Okay, this is the future contract CME in Chicago. This is trading view. This is the euro. You can look it up on the free account on the internet, and you can see we have a huge amount of volume right here on the same candle. Now, it is not the same amount of volume, exactly the same, that the Forex broker shows you. But if you're choosing a broker big enough, the sampling will be big enough to give you a volume that is at least twice bigger than the average volume. And that's what I'm looking for, because I'm a trader, I'm not an accountant, and I'm not looking for exact amount of volume, but huge amounts of volume that may show me where the smart money is buying or selling. Now let's look at a different platform. This is a platform of Thinkorswim, and we can see there is a big amount of volume there. It's the same candle, okay? It's exactly the same as TradingView because this is centralized exchange, CME of Chicago, where billions of dollars exchange hands. Now let's look at the British pound. The British pound has big volume as well compared to the average volume. Let's look at the Japanese yen. Look, big volume compared to the average volume. Okay, so we don't really need exact amount of volume, but volume that stands out from the crowd. Now let's take a look at how to manage this trade. When we enter into this trade, if we're gonna be doing some swing trading, this would be the perfect entrance. Now, intraday trading, it is better to focus on shorts, either scalping or day trading on shorts on the following days after seeing something like this. When I enter into a longer term trade, like swing trading, I like to divide it into two portions or four. Four is better, but at least two. Or even if I have to use micro contracts on a small account. Why? At the closing of the candle would be the entrance, the stop. I would place it 10 pips, at the very least 10 to 15 pips, plus the spread above the high. And as you can see, I would close half of the position when it reaches the same level as the stop. That way, I have eliminated, for practical purposes, the risk in the trade. And now I will be more comfortable waiting for a couple of days for the trade to evolve. Once it reaches this point and is struggling here, I'm going to explain what happened here. I can close another portion that way. And now that the move is kind of big, now I can move the stop to break even. So I have secured profits on two contracts, big profits on one contract, and leaving one contract for an extended move. The last contract, I will close it right here because of the big amount of volume. That is a good signal of buying over here. Now let's explain what happened here. If you remember, in my short videos, I was talking about that the move was overextended and I was expecting a correction. I didn't take this trade. Why? Because we don't have volume. And I would like to increase the probabilities of success by seeing a big amount of volume, which may tell me that the smart money is covering shorts and maybe buying. And that, remember, the volume is the gasoline that moves price. That didn't happen. and I found it suspicious. That's why I decided not to enter into the trade. The following day, we had news, and this red candle with a huge amount of volume finally showed me the cards I needed to see. The market wasn't ready for a big correction because they didn't cover the charts. More selling was probably coming. Finally, we had some selling here, fake move, beginning of the euro session, and now I had a good trade. I shorted here, put my stop right here. Also, my students, my Spanish-speaking students from my private group took this trade, and we wrote this move. Let me show it to you. This is the Swiss franc where I took the trade. This was the fake move. I shorted and I took advantage of this move. Look how orderly the move became. Just using enough amount of volume, seems like smart money was using just enough amount of volume to keep pushing the price. All right. And this is a screenshot of one of my students from the Spanish speaking community that after the fake move, he took the continuation of the trade on the British pound and also the one I took on the Swiss franc with more than 80 pips on the British pound and on the Swiss franc 61 pips. So if you think about it, Swiss franc moved that day 73 pips and we were able to catch 60 pips. I'd rather take one trade and take advantage of the whole move than be scalping back and forth paying a lot of commission. And as you can see, the move on the Swiss franc that day after the fake move was about 69, 70 pips. So my trader took advantage of almost the whole move, just like I did. I prefer to take one or two trades, take a big chunk in two or one intraday trades, than doing a lot of scalping, but that's up to the trader. In the British pound, we have a move of around 85 pips. So 70 pips is a big chunk of the move, and that's what we're looking for, and that's what I usually focus on. We had a big amount of volume here and we had a correction, one-day correction. Notice that in the British pound, there was a shakeup before the continuation of the move. We didn't have that shakeup in the euro, okay? But the correction so far has been very weak. Now, this volume now is something to consider. This big amount of volume. It has some very important news. Non-farm payroll on Friday. And we'll be seeing in 2 days, basically, you have new signals for new good trades. Now, let's look at the Japanese yen. On this trade, if your stop is really tight, they're gonna check out your stop. That's why I usually use 15 plus the spread, okay? And I scale out of the trade. I don't move the stop quickly because a lot of times the price comes back and checks you out. For example, had I taken profits here of half of the position and then moved to break even, they would have taken me out of the trade and I would have missed the bigger move. In order to sort of avoid that, what I like to do is to scale out of the position instead and not move the stop very quickly. Now, you may be looking at this move in the Japanese yen. It's out of the subject for this video, but we definitely enter into this trade. After looking at this, we are in it right now with half a contract, have profit of almost a couple of $100. This is live right now. But let's cover what we need to cover today. Let's go to the US Canadian dollar. Let's say we are looking at this move. Okay, let's go back in time. Which Forex pairs would I choose and why? Well, I would not choose the New Zealand dollar, US dollar, and I'm going to tell you why. On this one, the move was very small. I probably would have breaking even on this trade, covering half of my trade here, and then I would have been shaken out of the other half. Why I wouldn't have taken this one? Let me show you why. So we don't have to be experts on fundamental analysis. I usually use this calendar. It's called Forex Factory. And I like this one because it shows me only the majors and its important announcement are usually marked with red color. Going back to September 20th, where we saw that big spike in volume, it was the FOMC meeting. As you can see, the Federal Reserve kept the same interest rates, but the announcement in the press conference, after a lot of hard questions to the president of the Federal Reserve, he said that probably more increases will be needed, but definitely higher for longer, which is what strengthened the US dollar because it attracts buyers to collect the interest rate. Okay, traders, the reason I would not have taken the trade on the US dollar and New Zealand dollar is because the New Zealand dollar has pretty high interest rates, just like the US dollar. And remember, the US dollar strengthened after the move because it insinuates they're going to keep higher interest rates for longer. So it is a move related to interest rates. So it's best to take the trade with a Forex pair US dollar with another currency that has low interest rates or at least lower interest rates. And that will be the Swiss franc, Japanese yen, Aussie dollar, euro. Now, I would have not taken the trade on the Canadian dollar either, and I'll tell you why. Let's look at the move again. Let's say I saw what happened on time, and I'm thinking which pair to take because the move, it's because of the US dollar. But what currency am I gonna take the trade against to have the best possibilities? Not the Canadian dollar. Why? Because the Canadian dollar, it's correlated to oil because it's the first exporter to USA. The reason it moved sideways and then finally it gave in to the pressure of the US dollar. And we had the huge move in favor of the US dollar. It's because if we look at the contract of the West Texas oil, over here, oil was very strong. So that kept the Canadian dollar strong. And even though the US dollar was strong, the move was sideways, two strong currencies. It wasn't until we had the correction of the oil that finally we have the move upward on the Canadian dollar. So that's the reason I would not have taken the trade with the Canadian dollar. I wouldn't have taken the trade right away with the Swiss franc because the following day we had the announcement from the Central Bank of Switzerland. And you don't know what they're going to say. It may move the other way. So I wouldn't have taken the trade with the Swiss franc either because of that. Now, the move was negative for the Swiss franc, as I'm going to show you in a second. So the following day, we had the Central Bank of Switzerland, and the projections were we will have an increase from 1.75 to 2. And we didn't. They didn't increase interest rates. So the news was negative for the Swiss franc because of the interest rates. That's why the following day we had this big move, and it wasn't until that announcement that I could have taken the trade, put it on stop over here. And now we have a very strong currency, the US dollar, with a very weak currency because of the announcement. So that would have been a good trade, but not taken before the announcement of the Central Bank of Switzerland. So that leaves us either the euro US dollar, and that also leaves us with the GBP US dollar. And those are the best options, and also the US dollar Japanese yen. I could have taken the trade probably on the euro US dollar and USD Japanese yen. I could have taken half of my position off here. I probably would have been shaken out of the second half. And on the euro, it probably would work very well. And for experience, I usually divide the trade when the move is because of the US dollar in two pairs at least, because you don't know which one is going to move the strongest anyway. Okay? So those are some tips on a very good structure that we can see, and we can really tell where the smart money is entering and why. And we'll analyze other stuff in other videos. If you like the video, softly hit the like button, subscribe so you don't miss the next videos. I hope it helps. And any questions you may have regarding what I was teaching today, just put it in the comments and I will answer the questions personally.